Hi. Our group has decided to review and present our findings from financial statements of two companies which involved in agricultural activities. Before we start, let us introduce ourselves.
Hi everyone, I am Farhana.
Hi guys. I am Lily.
Hello, I am Rose.
And, I am Jasmine.
Hi. So the two companies we are going to analyze are a Malaysia poultry farm company, Lehong Berhad, and a Jamaica-based company, namely, Jamaica Broilers Group, which has similar nature of business.
Our agenda is to analyze both companies' annual reports, observe their financial statements, and make comparison for few chosen items. Before we move on to the next segment, let us look briefly into the scope of business of both chosen companies.
Scope of business.
Lehong Berhad is an integrated poultry farm, which supplies processed chicken, chicken-related products and eggs, breeding of both, layers, and broiler stocks based in Malaysia.
All of our products have halal certificate.
Furthermore, our areas of business consist of Peninsular Malaysia in Selangor, Perak, Malacca and East Malaysia, in Sabah.
Jamaica Broilers Group is also an integrated poultry farm, which produce and distributes poultry products, animal feeds and agricultural items. This business is based in Jamaica.
Our company was incorporated since 1958. We also have two main divisions, which is the Best Dressed Chicken and High Pro Ace.
We also have subsidiaries from local, which is Jamaica, and also overseas, which are US and Haiti.
So basically, both of the companies are having the same scope of business which involve both broiler and layer flocks, and other related products.
Next, let's move on to the company's missions.
Lehong's main mission is to promote healthier lifestyle and diet among Malaysians. They also aim to deliver products, fresh on time, to the partners and consumers. Meanwhile, Jamaica Broilers Group aims to fulfill their obligations to the customers, shareholders, employees, contractors and the community at large, with an attitude of service and a commitment to truth, fairness and the building of goodwill.
Let's have a look on the company's structure and operations.
We have taken a glimpse into both companies' profile. Now, we will analyze few items from the financial statements of both companies. We are going to analyze the financial statements from the latest annual report of both companies. Annual Report 2018 of Lehong Berhad and the Annual Report 2018 of Jamaica Broilers Group. Let's get started. Aspect 1. Biological assets.
According to both IAS 41 and MFRS 141, a biological asset refers to a living animal and plant. Examples of biological assets are plant and animal, such as maize, sheep, and cow, which grown and reared in the nature of agriculture, either to be sold or to be transformed into agriculture produce. Let us first analyze the biological assets of the local company chosen, which is Lehong Berhad. Lehong Berhad adopts Malaysia Financial Reporting Standard, MFRS. In Lehong Berhad's case, the biological assets consist of layer breeders, broiler breeders, and layers. Let's take a look on the financial statements of Lehong Berhad. This is the extract from notes to financial statement of Lehong Berhad regarding their biological assets. Broiler breeders refer to broiler chickens that are reared and prepared for meat consumption and other related products such as frankfurter. Meanwhile, layer breeders refer to female chickens that are reared for egg production. Some of them are also reared for breeds. Milk and meat are the examples of agriculture produce. Agriculture produce will be treated as inventories, which will be discussed later. We already know the definition of biological assets, right? But how about the recognition criteria and the initial measurement? Since we are now analyzing Lei Hong's financial statement, let's find out from MFRS 141. MFRS 141 states, an entity shall recognize a biological asset when, and only when, it fulfills these three criterias. The entity controls the asset as a result of past events. It is probable that future economic benefits associated with the asset will flow to the entity, and the fair value or cost of the asset can be measured reliably. Meanwhile, a biological asset shall be measured at its fair value less cost to sell, unless the fair value cannot be determined reliably. If we go back to the financial statements report of Lei Hong Berhad, we will notice that they did not measure layer breeders, broiler breeders, and layers at fair value less cost to sell. Instead, they use cost less amortization. Why is that?
Before we further discuss about it, how about if we look through Jamaica Broilers Group's financial statements too? Jamaica Broilers Group uses International Financial Reporting Standard (IFRS) as basis to report their financial statements and comply with International Accounting Standard (IAS). Let me explain the difference between IAS and MFRS. Basically, IAS is the International Accounting Standard issued by International Accounting Standard Board that almost every country complies with. In Malaysia, we have our own accounting standard board, which is MASB, that issues accounting standards and amend based on the International Reporting Standard in order to comply with business nature in Malaysia. So basically, Malaysia Financial Reporting Standard still complies with international standard. Jamaica Broilers Group's biological assets include beef cattle, breeder flocks and layer pullets. The initial recognition and measurement of biological assets are also explained in IAS 41. Similar to MFRS 141 that we have looked earlier, IAS 41 also stipulates that a biological asset must meet the three criteria to be recognized. Furthermore, a biological asset must be measured at fair value less cost to sell. Again, similar to Lei Hong Berhad, Jamaica Broilers Group recorded their breeder flocks and layer pullets at cost, less depreciation and impairment loss. To further discuss, let's look at Jamaica Broilers Group's explanation regarding their measurement of biological assets, which stated in their significant accounting policy. Jamaica Broilers Group further explains, in their notes, that, unlike cattle, there is no active market exists for breeder flocks, layer pullets and broiler flocks, at various stage of growth in Jamaica. Other references to market prices, such as market prices for similar assets, are also not available. Furthermore, valuation based on discounted cash flow method is considered to be unreliable, given the uncertainty with respect to mortality rates and production. Therefore, in accordance with IAS 41, those biological assets must be measured at cost, less any accumulated depreciation, and any accumulated impairment loss. Will be displayed next is the extract from the paragraph 30 of IAS 41, which explains this accounting treatment. In the case where the fair value of a biological asset cannot be determined reliably, an entity shall measure its biological asset at cost, less accumulated depreciation, and any accumulated impairment loss.
But Lei Hong Berhad did not explain in their accounting notes why they use cost less accumulated depreciation.
How about if we look at the MFRS 141 to find out?
This is the extract from paragraph 30 of MFRS 141, which is actually the same, with paragraph 30 of IAS 41, that explains the treatment of biological asset when fair value cannot be determined reliably. In such case, that biological asset shall be measured at its cost less any accumulated depreciation and any accumulated impairment losses.
Next, how about if we analyze the breeder flocks and layers market in Malaysia?
In Malaysia, there is also no active market for breeder flocks and layers. Their fair value cannot be determined reliably. What is fair value? Fair value is the price that would be received to sell an asset, or paid to transfer a liability in an orderly transaction between market participants at the measurement date. Breeder flocks and layers has short life cycle, and the market price always fluctuate, so it will be unreliable to determine the fair value. Other references to market prices, such as market prices for similar assets, are also not available. There is also no similar market price of similar assets to determine fair value. Valuation based on discounted cash flow method is also unreliable. So, that is because breeder flocks and layers should be measured at cost, less accumulated depreciation, and accumulate impairment loss, if any. Next, let's move on to the disclosure of biological assets in financial statements. According to IAS 41, followed by MFRS 141, general requirement for disclosure of biological assets in financial statements is that an entity shall disclose the aggregate gain or loss arising during the current period on initial recognition of biological assets and agricultural produce, and from the change in fair value less costs to sell of biological assets. Furthermore, an entity shall provide a description of each group of biological assets. Now, let us see how both companies disclose their biological assets in financial statements.
Lei Hong, Berhad.
Since breeder flocks and layers are measured at cost, so Lei Hong Berhad disclose their biological assets at cost in the statement of financial position. The biological assets are classified as current asset, since the life cycle of breeder flocks and layers are short. In the notes to significant accounting policy attached with the financial statements, they stated how they measure their biological assets, which is at the lower of cost, or amortized cost, and net realizable value.
Jamaica Broilers Group.
Jamaica Broilers Group also disclosed their biological assets in current assets in their balance sheet. In the notes to significant policy, they stated their biological assets and explained about how they measure the biological assets. That is all for biological assets. Now, let us move on to the next aspect.
Aspect 2. Inventory.
Hi, first of all, I will explain the definition of inventory. According to IAS 2 and MFRS 102, inventories are assets that are held for sale in the ordinary course of business. In the process of production for such sale, or in the form of materials or supplies to be consumed in the production process, or in the rendering of services. The inventories available from Lei Hong Berhad are livestock, broilers, eggs, frozen product, organic fertilizer, and many more. As for Jamaica Broilers Group, the inventories that can be found are exactly same as Lei Hong Berhad, however, since the business is much bigger. Hence, there are additional inventories such as cattle, sheep and frozen meat. In order to recognize the inventory, the asset should fulfill either one of the criteria that have been mentioned in the definition of inventories. Therefore, now, I will repeating the explanation for the recognition of the inventories. They must be held for sale on ordinary course of business. Next, it must be used in the production for such sale, or in form of materials or services to be supplied. Next, we will proceed to the measurement of the inventories. I will explain on how inventories are valued in both companies. Lei Hong Berhad implement MFRS 102. Therefore, it is measured by stating the lower cost between cost less amortized cost and the net realizable value. Since just now I have mentioned about net realizable value, so Now I will tell what is net realizable value actually means. It is an estimated selling price, in the ordinary course of business, less the estimated cost of completion, and the estimated cost necessary to make the sale. Besides, for Jamaica Broilers Group, implement IAS 2, hence, the measurement is exactly same as lay hung Berhard, which is being measured at the lower of cost, less amortized cost, and the net realizable value. Next, I will explain on the method of valuation used by both companies. There are three types of method for valuation of inventories. They are first in first out, weighted average, and last in first out. The method applied to the valuation of inventories will be implemented to the whole type of inventories. As for Lay Hong Berhard, the company chose to use weighted average method for the valuation. By using this method, cost of goods available for sale will be divided by the number of units available for sale. The cost of goods available for sale is the sum of beginning inventory and net purchase. The significant accounting policies of Lay Hong Berhard has clearly shown that they implement weighted average method for the valuation. Meanwhile, for Jamaica Broilers Group, the company chose to implement first in first out method for the valuation. Through this method, the earlier batch of inventories held by the company will be the first to be used or sold. Now, for the last part of inventories, I will tell on how inventories are being disclosed in notes to the account of the financial statement. These are the items that should be disclosed in the financial statement. The first one is the accounting policies adopted in measuring inventories, including the cost formula used. Next is the total carrying amount of the inventories and the carrying amount and classification appropriate to the enterprise. Next is the carrying amount of inventories carried at net realizable value. Fourth is the amount of any reversal of any write-down that is recognized as income in the period. The next one is the circumstances or events that led to the reversal of a write-down of inventories. And the last one is the carrying amount of inventories pledged as security for liabilities. First is for Lay Hong Berhard. From the screen, we can see the extractive financial position of Lay Hong Berhard. In the financial position, inventories are categorized under the current assets. From the notes to the account of the financial statement of Lay Hong Berhard, we found that all inventories are being well disclosed. Next, we will look at the disclosure of Jamaica Broilers Group's financial statement. Here, we can see that the inventories are also classified as current assets in the Jamaica Broilers Group financial position. THS is because, according to IAS 2, inventories are classified as assets, since it won't lasting for more than a year. Notes number 21 of the notes to the account of Jamaica Broilers Group shows all the items that need to be disclosed. It includes the provision for the obsolete goods and the written down amount for the current year. That wraps up our analysis on item inventory for both companies. We have discussed about two items in financial statements of a local and an overseas company.
Lay Hong Berhard adopts MFRS, while Jamaica Broilers Group adopts IAS in their financial statements.
Yes, we analyzed both IAS and MFRS, and learnt about the definition of both items.
Do not forget, we also have covered the initial measurement and recognition of both items, based on both IAS and MFRS. And disclosure too. Well, basically, IAS and MFRS are identical in treating biological assets and inventory, right?
True. That means complying with International Standard Board will make financial statements disclosure be standardized and comparable.
If we comply with generally accepted accounting principle, it would be no problem. On top of that, I would like to suggest Lay Hong Berhard to put better description of why they measure broilers and layers at cost less amortization, since it might confuse users.
Yes, they should. But overall, I think this was a very interesting topic to discuss about. We got to analyze and compare financial statements of both local and overseas companies. Now, it is about time for us to wrap up our whole presentation. Well, we hope our video would meet your expectation.
That was all from us, thank you.